All right. Good morning and welcome to the weekly meeting. Um, what I did for the um, assets that I have in this week's meeting, one was some that Sean um, requested to be added to the meeting. Two, I'm starting off be on the monthly. Um, so I started off on the monthly and listed the pairs that I think may start making a move sooner than later than next than sooner than later. Um, so with that being said, I'm gonna go through the pairs that I've added and why I've added them. And if there's anything that I've missed, we can you can just drop your um whatever I missed in the chat and we'll go from there. All right, first things on the chart is uh AUDJPY. So based on the monthly, um, price last month was bullish or last month ended bullish. So in a bullish trend. So I would be expecting price to pull back to, which it has already done. So now I'm just going to go down to a lower time frame to um yeah, I'm gonna go down to a lower time frame um to see how you can capitalize on pips buying up to this zone. So based on the weekly, so based on the weekly, we had this breakup structure here, and you can see that price has pulled back. Now there is a weekly bearish order block. So we have structure, right? We have this structure because it was a order block. Now, how far price sells down is the question. It would be great to have price to sell down to this zone and then start buying back up. So this is where I would look for um, the buy back up to this zone. So now if I go down to the daily, um, and of course, as I go down in time frame, I would be narrowing down that zone. Oop, oop. All right. I would be narrowing down that zone to narrow down your risk, right? So, based on now, I personally would not sell this back down, but I would definitely look for or set an alert for price to get to this zone to buy back up. So, this is the internal structure that's currently there. You had this push down and this push up. So, I know most would say that this was a structure break, but for me, I need to see price break the bullish structure, the overall bullish structure, um, before I would get in a sell if I'm going to counter trend that trade. Because price could just go here and then, as you can see, start buying back up. So, um, and that's on the 4 hour time frame. So it's up to you. I'm just gonna say it, I wouldn't sell it, but If you are, I would wait for price to come back to this zone, look for a shift in structure to then sell it back down to, um, oops, sell it back down. And it may just come and fill this gap, which is around 97 pips. But at that point, it is a shift in structure. So that's what I would look for the upcoming week. A price to come into the zone if you're going to sell it, to then sell it down to the lows, to this low. This was the swing low. And then you can um, trail it or take profit after that. All right. Any questions on AUDJPY? All right. For AUDNZD, price is currently in a bearish order block. I don't know why I put this one on here. Let's go to the weekly. Let's go to the daily. So, yeah, I don't know why I put this one on here. So that would be the swing low. I would need to see price close below here because this is the structure. Mm, yeah, I don't know why I put this one on here because this could push back up to this zone. So we're gonna skip that one. Forget about it. All right, let's go to AUD based on the monthly price closed below the previous, I mean, closed above the previous month. So either price is going to pull back and keep pushing up, possibly to um this order block, this bearish order block. So let's go down to the weekly. And as you can see, we have this break of structure here. So that means I would be looking for price to pull back to this zone. It has tapped it, but that's on the weekly. So if you go down to the daily, um, you have more daily demand zones in this area. Um, so price pulled into this demand zone and started pushing up. So if price closes above this zone, it is likely it may just keep buying up. So so for this AUD USD, either price is going to respect this current bear structure right here and then start selling back down some more until it gets into the zone, or it's going to break the structure because it has already tapped into a discount zone. So it tapped into the 618. So it could just continue buying up if it breaks this internal bearish structure. Any questions on that? Any questions? All right, Chef JPY, based on the monthly, um, let's say previous month. It did close above previous month. Um, Price swept these highs. Um, so you have this break of structure. Oh, hold on. Let me go back to the monthly. Never mind. Um, and you have, I don't see a lot of demand zones, any demand zones. So my guess, this break of structure, because you have this break of structure, and then price has shifted structure, right? Internal structure. Um, Price could pull back, and let me just bring this over. Price could pull back to this zone and start selling. Um, or if it's going to pull all the way back, I would be looking for it to pull back to this zone to sell. So it just broke internal structure, and then you have this external structure here because this is the higher time frame structure. So, looking at it here, like no structure has been, it hasn't shifted structure for, well, for me, I don't see a structure shift for the buy. On the 4 hour, it's still in this bearish structure. So again, price could come up to this zone here and start selling. There's a 4 hour supply zone that price could start selling. All right. Um, any questions on Chef JPY? EuroCAD. EuroCAD. Let's see. Let's go to the monthly. I had a 78 because we're in this bearish structure. I had a 78 marked up. Let me see what the 88 looks like. Mark up the 88. All right, let me go down to the weekly. So there was an 78 supply zone, and price is currently at that zone. So, and that's on the weekly. So if I go down in time frame, it's probably gonna move just a little bit if it shows me. So here's a zone. Let's mark that pink. And y'all know the rest. Go down, just keep going down in time frame. And here's a um supply zone here. So it could go up to the 88 as well. So based on the daily, this is the daily break of structure here, this candle here. And let's go to the 4 hours, see if there's been a shift in structure since there was a daily sweep. You have this sweep. Let's go down to the 1 hour. Price still hasn't shifted structure yet. This is the 1 hour structure. That makes this the swing low. And let's just go down to 30. Yeah, that's still all the same. So price could continue to keep buying. Um, because it's in this bullish structure still, internal structure. So price could continue buying from this zone. This is the demand zone. So yeah, price is likely going to keep buying from here. All right. Any questions on EuroCAD? Euro Chef. Based on the monthly, um, why did I do this one? Okay, so this was the swing low. The price has been swept. So if I go down to lower time frames, let's go to the daily. You have this demand zone here. That price, and then it pulled into this supply zone, right? Pulled into the supply zone. Looks like it's selling back down to this demand zone. So I would be looking for a buy from here. And you may want to just cover below this, where this swing low was, which is 54 pips, and take it to at least the high, 447, 150 pips. That's what I see for EuroChef. Let me go. And the 4 hour. Yep, I would look. Let me go to the 1 hour. See if I can narrow down that. Oh, that's why I have this here. So this was a 1 hour demand zone. So as price is coming back into the zone, it could come down to this zone, which would narrow your stop loss even more from 56 pips to 25 pips. And then that would also make your reward now, instead of 150 pips, 178 pips. So yeah, I would be looking for the buy back up to this high for EuroChef. EJ, any questions on EuroChef or anything that I've talked about so far? Okay. All righty. So for EJ, we had a break of a previous high. Prices pulled back into that zone, but we're also at a strong resistance. So, so if I go down to the weekly, we're still in bullish structure, right? And then if I go down to the daily, we've broken some internal structure on EJ. This is still my swing low. So price could be respecting that higher time frame order block, which it tapped into this daily supply zone. Price could be respecting that higher time frame bearish order block and could start selling. Now, the sell that's happening now, we've had 1, 2, 3 days of bearish momentum. Um, you could pull back and start selling some more, but I wouldn't take it past this zone as of yet. This is the swing low. So if a pullback happens, then I would sell it down to this low as of right now because price is still bullish. And of course, if it breaks this low, then you'll be looking for sales back down to this low. And that's what I see for EJ. Um, again, we broke internal structure. Price looked like it's pulling back. Now, if of course we have this bearish structure here, price could pull back some more, but definitely be careful if you're trying to buy it back up, or you can just wait for price to pull back to a zone, a premium zone. And let me just delete this, which is a 78 or 88, or I'm sorry, that's my premium zone. Um, which is anywhere between 50%, 618, 78, and 88. And again, you can sell it down to either this low or this demand zone. Any questions? All right. Um, Euro USD. Let's look at the bigger picture. So we were in this bearish structure here, right? And price has pulled back to, or, oh no, it hasn't pulled back to it yet. Okay. So this is the current supply zone to look for a sell because we're in the bearish structure. So if I go down to the weekly, the current weekly structure is, oh, let's go to the daily structure. The current daily structure, this was a breakout structure that makes this the swing low. And this, of course, our swing high. So 4 hour. So price has tapped into this 4 hour demand zone and has pushed up and has broken structure on this last internal swing. Hold on. And I just want to mark up this daily structure and then identify where price could be buying up to here. Okay. So this is internal. This was the daily structure. This was the break of structure. So I don't count that as the actual structure, but because price did not break until here. So that makes this the swing high, that's the swing low, and you want price to pull back into your the premium zone. All right. So I would look for price to pull back into this zone for a sell, since that is the structure. But I do see that there is liquidity right here. So price could wick it. So that's what, 22 pips. So you can either round it up to 25 or 30, because price may wick, grab liquidity here. Um, to then sell back down to this low, or to the next demand zone, which is right here. That is what I see for your Euro USD. And I think the Dixie, or the, I'll go to it in a second, because I think the Dixie is currently selling to buy. So this would be buying to sell. All right, GA. Let's go to the monthly. Um, Based on the monthly, we had a, let me look at higher time frame. Okay, price came into this bear structure, shifted structure, pulled back to, I think it was a weekly or a daily. Right here, supply zone, and it's currently selling. So let's go back to the monthly. So we had a bearish month. Price has been bearish for a few months. So I would be looking for price to pull back into this order block to start to sell. Wait a minute, why did that happen? Let me draw two zones. Okay. So I would be looking for price to pull back into this bearish order block, which it has. This is the order block. So price could pull back into this, possibly pull back into this supply zone. Let's go to the daily. But currently we see we're still in some bearish structure because price broke structure. So that made this the current swing high, this the current swing low. Okay. Um, and let's just look to the left to see what has happened. So I can see price pulling back down, or it did tap into here. I can see price pushing back down into this zone before pushing back up to the upside. And it's just because of a level of um, it's just a level, it's a support level, a key level, support resistance. Um, and let's look at the 4 hour. So based on 4 hour, this is our 4 hour structure. This high here, this low here. Um, had this break internal. So price could pull back into this 4 hour and start selling. Let's go to the 1 hour. So yeah, this is still our 1 hour supply that price can pull into and start selling some more. So if you're trying to, I don't know how many pips that is for, it's 52 pips from where price is now. Um, to the daily. So based on the daily, there was a break of this high. So price can pull back and keep pushing up to this zone. But I mean, I would wait for price to, again, that's only 50. I don't want to say only, but because you can make $50, right? Um, but I would look for price to come back into this zone and then possibly sell back down into this zone before buying back up to here. So if it pulls back into this zone, that's a bigger move than the 50 pips. Even the sell, I think, should be at least 100 pips. So yeah. So I would definitely look to see if there's going to be a sell back down to the zone based off of the 4 hour, 1 hour structure, supply zone. All right. Any questions on GA? Nope. GEO. Okay. All right. So based on structure, we're here. All right. Um, Now I do believe price is going to break these highs only based off of market maker structure, right? So currently we're in this bullish structure, but then we had a pullback. We had this break of structure here, and then we got a monthly pullback. And then another month did not break above that high. And then another month was just consolidating. So if I go to the weekly, we had an internal shift of structure. And then price pulled back to, I think, the 78 of that structure. 78, the 88, pull back to the 88, and then started dropping. So let's go to the daily. Now, I will say that, so we had this break of structure here, and then we had this swing low that was swept, and then we have this daily demand zone here. So price is either going to, what I think price is going to do is come back to this zone, but I do believe it's going to push up again. And I know that there was 4 hour and 1 hour, a 4 hour and 1 hour demand zone, I mean supply zone. That's the 4 hour. There's a 1 hour too. Hold on. But if price pushes back down to that zone and break, here we go. So if price pushes back down and then breaks this low, then you'll just keep looking for sell structure, selling structure. But my personal thought is it's going to push all the way back up here before selling. That's just my personal thoughts. And actually, now that I'm looking at it on the 4 hour, there is this 4 hour zone that price can push into and then start buying. So I would be looking for sales or am looking for sales back down to this zone or this low. Any questions on GU? You can. All right. Let's look at overall structure. Of course, it's overall bearish. And then we're looking to buy into this zone here. Current structure is bullish. Price has pulled back into um, a discounted area, which is at the 6618. Could it push up and then start selling back down to the zone? Yes. So, but based on the monthly, the last monthly candle, so the previous month just swept, last month swept the previous month. So let's see if any structure has shifted. Matter of fact, it bought into a weekly supply. So you could get a turnaround somewhere. Let's look and see. This is current daily structure because price broke this high here. So I would be watching out for a shift of this low if it's going to start selling. But right now it's still in bullish structure. It could come down and start pushing back some more. Then you just have another level of structure. You need to identify your swing low and your swing high. And of course, like I said, if it breaks this, if it breaks here, then this is the new swing low. And then if it shifts that low, then you're looking for yourselves back down to this low. And if it doesn't shift structure and it breaks this high, then you'll be looking for buys. Any questions on that? All right, you chef. You chef is currently in I think a weekly demand. Yeah. A weekly demand zone. All right. I think price broke, shifted some. This low was swept. This this was the internal swing high. And I think on the 4 hour, nope, it didn't break up. Yeah, I can't tell. Um, but right now you're still in bullish structure. Okay. So you're still in this bullish structure. So price could push back down into this zone here before buying back up to this zone here. I'm going to delete that. Any questions on that? So this is what I would, if I were trading, use chef. That's 17 pips. So I would round that up to 20 or 25, whichever one you prefer, or 30 or 40, whichever one you prefer. And buy it back up into this zone. All right. Um, for gold, I marked this up because there was a break of structure. Price started not taking out this high, this swing high on lower time frame. Oh, let me start on the monthly. Hold on. Let's just say last month closed above the previous month. So you definitely, I would want to see price pull back some more before getting in a buy. But price has been way too high. Um, so based on the weekly, you have this weekly break of structure here. Um, price did close above this previous week high. So price could just pull back to here and start buying some more. Let's go to the daily. That is daily structure. Price pulled back, and that is structure here. So um price could pull back. And let me delete that because now at that point it's a whole different story. Um that is the swing high. This would be my swing low, daily swing low. So I would love to see if price pulls back somewhere in this zone. And if I go to the 1 hour, you have this was a market structure shift. Prices pulled back into this zone, but I would need to see, because this is the current internal structure. And I believe price tapped this zone already. It did. This 1 hour demand zone. So price could just keep going already. It's still in bullish structure, so it could just keep going. This is the last level of structure here. This is the internal structure. So, yeah, price could just keep going. It's probably gonna keep going, knowing gold. So that's what I see for gold. All right, Sean still on here? Sean. Yeah.
I'm afraid so.
Are
But
you afraid?
I
Ah,
mean, I don't really have a whole lot to say. I mean, to be honest, I gave you those stocks.
here, yeah, they're here. I got them right here.
Yeah, I was just gonna say you pull up the charts. I mean, you know how to break down charts, so I'll let you take the lead.
Okay. All right, all right. Um, Apple wasn't one. Circle was one. I have circle possibly pulling back to um oh no. Is this right? No, 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 no. That's 119, 120.
I don't think it's gonna pull back that far, but it might. It's possible.
Because it's shifting structure, right? So once it shifts structure, it's gonna pull back a little bit.
Yeah, it's probably
Um,
gonna pull back some. I just don't know if it's gonna go back to 120.
yeah, that was my thought on this. This right here was my thought on this, right? So, yeah, but that's not the one you'd put on the list.
Yeah,
One,
that is one that I put on the list.
oh, did you? My bad.
Uh-huh. It was circle, hymns. Hold on.
CRWV,
Yeah,
core
cool
weave.
is another one.
So for core weave, it's currently in this bearish structure, right? So, um, I'm thinking core weave, and it did tap into this 4 hour supply zone. And then it gave some 4 hour bearish momentum. Now, that doesn't mean it's going to sell, but if you trade imbalances, it tapped into the imbalance and rejected. So it could keep buying, but it's still within bearish structure. This would be, I would need to see the break of this high first before I would look for a pullback to buy. So my thought is that price is probably going to sell down, sell back down to the 78 or the 88. But again, if it breaks this high, then I would be looking for the buys. And it is bullish right now. So if you want to gain on the bullish momentum, back up maybe to this high because it could keep going. Um, I would say wait for price. Yeah, I would. Yeah, I wouldn't get into this one right now. But if Sean says it, then maybe if it breaks this high and then get in and starts pushing up.
I mean, what I would say too is I look at these things,
I
you
know
know,
long term.
yeah, on a monthly, mainly on a monthly. Um, so I'm looking at this, say between October and December, this is going to be higher.
So this on based on the monthly, we have a bullish monthly. Well, this didn't exactly break this high.
So
So that would be my only concern.
use your Fibonacci though on that structure. It tells
But
you,
see, the thing is for me, let me clear this. For me, the only structure is this candle right here. I would need to see this right here break above this high, or at least wick above the high before I could before because it didn't take out the high. Did it take out? It did take out the low. Um, so the only thing I could fib is this one candle right here. That's a
uh,
that's a Tide move.
that's
Fibbing.
not true. I mean, you need to anchor that Fibonacci on that red candle.
I'm on this red candle
No,
right
no, no,
here.
on that red candle furthest to the left.
This one here
The one furthest to the left, that little smidget of a red candle, that first red candle.
to the left, to the right or the left.
Left, Kim,
Right
Lower,
here?
lower.
Oh, right here.
Yes.
Oh, but
Kim.
I'm doing it. I'm doing it. I'm doing it.
Now, that's how I use the Fibonacci and why I think what I think. Now, if you don't believe that, then okay, then I wouldn't argue with you. I'm just simply telling you why my bias is the way that it is.
Mm-hmm.
But if people don't subscribe to that, I can respect that. That's what makes markets.
Mm-hmm. Yeah. No, I agree with that part. I just don't agree with that part. Okay.
If you look at that chart and you go to the Apple chart, you go to the Google chart, you know, now what chart is this?
This is Apple.
Okay, so that last green candle,
Mm-hmm.
if you were to erase that candle
Oops. Sorry.
with just that last one,
Mm-hmm. I got you.
if you were to erase that candle, that chart looks pretty much like core weaves. It's just got more price history. You had an expansion move, then you had a pullback,
Mm-hmm.
and you're on your way up. I mean, you're on your way up to the negative 27. That's essentially what CoreWeave is doing. It's just behind. If you pull up Google's chart, it's the same. If you pull up Tesla's chart, it's the same. You know, um,
Oops. Apple. Mm. On the monthly. See, that looks a little different to me. See, this is looking at the monthly. I see that price closed below this low. It pulled back to probably 78 or 88, rejected. So based on the monthly, this is looking like a sell. Back down to this zone somewhere. Let's pull back to the 618. Um, but we'll see. We can see. This is the Apple one on the monthly. This is definitely bullish.
why is that? Why is the Apple one bullish and the other one isn't?
Look how this is rejected. This rejection
Well,
right here.
hold on. I mean, I know what you're gonna say, but all I'm simply saying is Apple Apple did the same thing. I mean,
So, and this is what
you
I this
have
is then this is what I see. This was the structure, right? Price pulled back into this demand zone and started buying up. And then what I'm seeing here is this is the structure. It's bearish structure. Price pushed up and then pushed down, and price pulled back into the zone to push back down. That's what I'm seeing.
okay.
That's what I'm seeing.
All right, Kim.
I
We can.
mean, I look.
I mean, I'm not tripping. I'm not arguing or I'm not mad or nothing. I
No,
mean, it
I'm
is
just
what it is.
saying. You asked me why do I see it differently? Because of this whole rejection right here. This right here is bullish.
Well,
Last month was
my argument to you is um, when I bought Apple when it was down around that 200-week moving average,
mm-hmm.
the chart looked bearish, but because of the fundamentals, um, I knew it would break through and turn bullish. CoreWeave is a semiconductor stock, so it's going to do the same thing. Is all I'm arguing, because what I try to do is blend the what I see on the charts with what drives the charts,
Mm-hmm.
and there's going to be money print.
I
There's
don't
going
know that
to
part.
be a risk on an environment, so the chart will turn bullish. It's a new stock. It had its initial run up. It pulled back 62%. There's a chance, it could pull back, it could turn around and pull back, 78. Maybe it does. I doubt it does, but maybe it does. But if that thing does pull back a full 78%,
Mm-hmm.
you better be buying it.
Mm-hmm. Absolutely.
But I don't think you're going to get a 78% pullback. We're still in October, so it's possible. I just doubt it.
Yeah. All right. I'm gonna go to the next one because arguing with these Todd brothers.
I think I think when you're if you're gonna get the most bang for your buck,
Mm-hmm.
I mean you can be a breakout trader, but the true gold is buying it when everybody hates it, you know. And a lot of times that means buying it, at the lows, at the 80% pullback, at the 62% pullback. I mean, you can wait until it breaks, you know, the the previous swing high and pulls back into the swing high. I mean, you can do all that, but I mean, understanding how price works and what an 80% pullback means, what a 62% pullback means. I mean, I don't understand why you necessarily wait for that, but I guess it is what it is. So
All right. Him and hers health. What? I don't even. I meant to look that up, but I didn't.
it's one of those uh, online platforms.
Okay.
Yeah, I do hair loss, probably some weight loss stuff also, maybe some other things too. But it's one of those telehealth kind of platform.
Okay. Telehealth. Okay. All right. So your thoughts on this one is it's buying or it should be buying.
Well, again, longer term, this is going to buy. What you basically had is you've had a move up, and now it's selling back off. It's retesting a breakout level, but it's going to turn around and continue up. So if you fib from that swing low, the most recent swing low to the top, you may get an 80% pullback. I think if you get that 80% pullback, or if you get some sort of reversal around the 62, it becomes a buy.
Okay.
Because what you had is a move up, and now you're just getting the sideways consolidation action. It's gonna chop solidate, I don't know, maybe over the course of this month. And what I think, definitely by the time you get to November, this thing's going up.
Okay. I'm gonna leave this here. Quick question, Sean.
What's up?
You saying this is one of those telehealth?
What health things?
The health.
Yeah. Uh-huh.
Is this similar to Teledoc?
Yeah. It's all in the same class.
Okay.
And I mean, while we're at it, we can probably pull up the Teledoc chart, because you know how I always talk about the network effect.
Mm-hmm.
Okay, well, sometimes I do. Maybe I talk about it in other forums. Um,
Yes, please
anyway,
re-explain.
say again.
Please re-explain.
Okay, so if you think about the internet, if you think about Meta, if you think about Apple, if you think about Google, if you think about Amazon, if you think about Bitcoin, you think about Solana, what all of these things have in common is that they've achieved something called a network effect. And you can Google Metcalfe's law. We don't have to do it now. You can do it on your own time. And you can also Google Reed's law, and they will explain, you know, the network effect. But basically, what it means is what makes Apple valuable, Meta, Google, Amazon, is you have a network, which basically means you have a network of a bunch of people. And what those laws basically say is the value of a network increases exponentially every time you add a new user. So if me and you are the only ones that have an iPhone, or if me and you are the only ones on Amazon, or if me and you are the only ones on Facebook, it's not valuable. But if we keep adding new users, the network grows. And as the network grows, the value of it increases exponentially. That's why if you look at a Meta chart, an Amazon chart, a Apple chart, a Bitcoin chart, a Solana chart, whatever one of these charts, anything that has achieved a network effect gets the exponential crazy price movements and growth. And that's basically what goes on in crypto and what has gone on in certain stocks. It's why certain stocks, tech stocks, outperform value stocks. And you get people on here, probably like a Kim or a whoever, that'll be like, hey, the PE ratio of that is way expensive. It's way overvalued. That thing is a sell. That thing is going to come down. Well, eventually it probably will, but that thing will run for a long time because of the network effect and the adoption of it. And so when you talk about Teledoc, when you talk about a platform like HIMS, there's another one out there called Oscar. I think it's OSCR. When you talk about some of you know, uh, these kinds of companies, and SoFi is one of them, Lyft is one of them, Uber is one of them. Basically any of these things where you're using apps, you're using technology, it's a network. And as more people start using Lyft or Uber or SoFi or these telehealth platforms, the value of them will increase exponentially. So that's why I'm telling you guys, like, I know Kim is looking at these charts through the eyes of a day trader. you know oh, we have this order block, it's bearish. It is bearish, but I look a little long term, a little longer term. It is moving higher. It's moving higher, because we're moving into that season of the year where everything moves up. Also, everybody's printing money or making or loosening financial conditions, which will feed tech stocks. These are essentially tech stocks. It's also going to feed crypto. So, what I'm saying is, put these on your radar. Buy them, don't buy them. whatever it is you do. But um, over the years and months, people have asked about stocks. I'm giving you the stocks. I'm giving them to you before they're crazy high. I see some big red candles on some of these stocks I'm giving you. I mean, you buy shit when it's unloved, when there's a little blood in the streets, or in some cases, when there's a lot of blood in the streets. So I'm not telling you to go out there and buy gold because it has a million green candles and it looks like, an aroused man. I'm not telling you to buy a chart like that. I'm suggesting charts that have upside. Put the Fibonacci on the chart. Use the Fibonacci extension tool. It'll give you a roadmap, an idea of the upside of the chart. So, but it's going to be up to, I guess, the individual person of, whether they believe the chart or not, you know? Um, and I guess I would leave it at that.
Yes, I do see your point, and I would like to know your opinion on this particular one right here, please.
Which one?
This one, Teladoc, because it's been dropping, dropping, dropping. It looks like it found its floor. However, do you actually think long term it should exceed its high? It actually should, or no?
I think it should. What I don't like about the chart. I prefer to get some bullish action though on the chart. Uh, I do agree with you. Is this that same chart?
Yeah, I
Yeah.
think Kim just went to the daily. When were you on before the monthly?
Mm-hmm.
Can
My
you go back to the monthly, please? Oh,
What I would say about this chart is, from a risk reward standpoint, I think this is the bottom of the chart. I mean, I think if you put money in this chart, you it would have to go to zero for you to lose. Um, but there are other charts that I like better, is what I would say. But that I think this chart is probably just running behind a lot of the other stuff.
mm-hmm.
But it it's a horrible looking chart, though. I will say that. I probably wouldn't buy it at this point. But again, this is this probably if you bought this, you would be buying pretty damn close to the bottom.
Yes.
So
And when I
I,
look at it, I look at I see, let me go back to the daily 'cause that's better. I see there's been a shift in structure, pulled back to a demand zone, and is starting to buy.
right, and that's what I see too. What I can't explain is why it's lagging behind the others. And just because it's lagging now doesn't mean that it'll always lag. You know, Given the seasonality of where we're at and everything I just described about the network effect, this is probably probably a good buy. I would have to do a little research on Teledoc. I've heard of it, but um, I haven't done any work on it, and I really don't know a lot about it. I don't hate the chart though. I would say that.
So where do you actually research the stock? I mean, I know that on TradingView it shows like it gives you stats and stuff like that, right? When you
Mhm.
click the
Honestly, Elfie, I YouTube a lot of this stuff.
okay.
There are certain YouTubers that over the years that I've kind of grown to trust their opinion. And but what I do is I marry their opinion with the chart. You know, if I don't like the chart and they're saying buy it, I may not buy it. Or if I feel like the chart is extended and they're saying buy it, I'm probably going to try to wait for a pullback of some sort before I buy it. You know what I mean? Or they may hate the stock or not like the stock or whatever. A good one that I'll use as an example of that is something like AMD. Some of the YouTubers that I follow and listen to, they don't, they kind of they don't show a lot of love to AMD. To me, AMD, it's a buy. It's gonna move higher. So because I know AMD, it's not Nvidia. Nvidia is the class
Right.
leader, so to speak. But the
Yeah,
way I look at a lot of this stuff is we have Visa, we have MasterCard, we have Discover, we have all these different credit cards. You know, when I look at the automobile industry, in the United States, we got Ford, we got Chevy, there's BMW, Mercedes, there's all these different cars. So you don't necessarily have to be driving the top of the line car to get from point A to point B. You don't have to have a certain kind of credit card, to be able to buy shit on credit. So the same thing with these semis. Nvidia may be the top of the line semiconductor uh, producer, and maybe the world's richest, fanciest tech firms might buy their shit from Nvidia.
I agree.
But there's going to be a bunch of businesses that need affordable. You know what I mean?
Yes.
So it's kind of like this teledoc thing. There are other charts that look better that are ahead, but and maybe there are other businesses that'll make more money than teledoc. But teledoc will probably, if they achieve the network effect, you can still make money on teledoc.
Cool. Thank you.
You're welcome. But what I would say is, when you're talking about trading and you're talking about investing, remember most of the time when y'all are trading, y'all are using leverage. When you're investing, it's spot. You're buying the stock. There's no leverage involved. So when Kim is talking about those zones and waiting for those pullbacks and so on and so forth, it's it's not wrong per se, but if something if something can potentially go 100%, 300%, 500%, you know, does it really matter if you bought it at 135 and it dips down to 120? I mean, does it really matter if it's going to $500? You know, and that's how I look at it when I'm talking about investing, because I can't get cooked out of the position because it's a spot buy.
So I know that Lyft was another one on your
Yeah. Mm-hmm.
list.
Is this lift?
Yep.
Right. So you see how that chart has uh it's basically consolidated. What
Hmm.
what time frame is this? Because I'm looking on my phone.
On the monthly.
Right. So you see how that chart is kind of zigzagged, it's basically gone nowhere. Um, this is what I imagine, and probably to a lesser degree because we're running out of time. That what was the chart we were arguing about? Was it CoreWeave?
I think it was uh Corey. Yeah. Yeah, yeah.
Right. So because CoreWeave is a newer stock, you'd probably have to go to like the weekly chart or the daily chart, you know. Um, but this is kind of what I imagine this one would do. It could drift a little lower, but you're probably going to get some sideways, some chop solidation before it moves up. And with this being October, I think if it's gonna chop solidate, it's gonna happen this month, and next month it's probably going higher. There's just not a lot of time left for this stuff to continue to bullshit. I think you're gonna see a lot of stuff move up, if not this month, next month.
Mm-hmm. In the daily. Let's go to the daily.
And what do they do?
CoreWeave, they're a semiconductor
Oh,
kind of
like
company.
like
Um,
Nvidia and AMD.
yeah, Nvidia made a $4 billion investment in them.
Oh, so they took them over, or they just is it
I don't think they took them over. I know they invested in them. I
okay?
have to go back and read because I'm not a native tech person, so I don't want to misspeak on exactly what they do and why Nvidia made the investment, but they did. So that's a lot of money, and it says a lot. I think it tells you what people in the know think about the company. So when this thing starts trading and it blasts off and it runs up to wherever it ran up to, now it retraces 62%. I mean, you guys have been involved with trading for years. Y'all know what that means. I mean, y'all know the power of three. So could it come back 80%? Yeah, it could, but it's already in a discount. So if you're trying to trade it, I guess you nitpick the technicals. If you're looking at it from an investment standpoint, maybe you buy some here. It's in a discount. If it comes down to the 80%, buy some more.
Wait, they just got on here this year. This is a brand new thing, yes?
Yeah, it's a new company.
Oh wow, and they push like this already.
Yeah. And a
Okay.
lot of them will. And when new companies come out or they start trading, if I can't catch them early, I don't buy them. I
Mm.
wait for them to pull back, you know. Another one that you can pull up and look at is Circle, CRCL, stablecoin company. Starts trading, runs up, pulls back. It's time to buy it. So you can wait for price to run up and break, that bearish order block up there. But knowing that we're in the month of October, knowing that governments are loosening financial conditions all over the world, Europe, China, us. I mean, how much further do you think this is going to drop? Especially if you're not trading it, if you're investing in it. So, what I would say about all of this stuff, this is October. Put it on your watch list if you're not comfortable buying it. Revisit this at the end of October. Revisit this, I don't know, November 15th. Revisit this December 1st and see. That way, if you don't buy any of this stuff this go around, there will be another go around at some point. There will be other new companies that come out at some point. And if you pay attention to these, then maybe at moving forward, you will have the confidence to buy this stuff. You know, um, can you pull up the Google chart and and put on? You can go to the probably the weekly chart because I want to go to Google and Apple. I've mentioned this the last time or two that I was on, but I want to mention it again. It's probably worth mentioning it again. Turn on your 200
Oh.
period moving average. That's the 200.
Mm-hmm.
What is this? Apple, Google.
Google.
All right. And what time period is this? Monthly?
This is on the monthly. This is on the weekly.
Okay. All right. Warren Buffett, not Rashawn Todd, said if you did nothing but buy stuff once it touched the 200, you would make a lot of money.
Mm-hmm.
So when we're talking about a core weave, when we're talking about a circle, those are new stocks. So they don't have 200 weeks of trading history. But when these things dip, the way Warren Buffett says is if you buy stuff when it trades down into the 200 period moving average, you make a lot of money. Okay. If you do the work, and what you'll notice is when you use that Fibonacci, when you get those big pullbacks into or below the 200 week, the 200 day, the 200 month, if it's old enough, you're getting a 62 to 80% pullback. He's just not telling you, hey, this is in the golden zone. Hey, this is the optimal trade entry. His way of saying it is, hey, just don't do shit until it pulls back into the 200 period moving average. ICT will tell you, hey, the optimal trade entry. Other people will talk about the golden zone. It's all the same thing. So when it's a newer issue like a circle or a core weave, you don't have 200 weeks of history. Maybe you don't have 200 days of history. I'm busting out the Fibonacci, and if it's traded into the 62 and or the 80, then I'm buying it. Especially when I marry that against the fundamentals, the macro, and the macro is positive. I think we're late in the run, but we have another leg higher probably. I mean, there's a theory out there that we may run into 2026, and I kind of think we will, but I gotta I gotta probably tread lightly on that. But this pullback right here is, in my opinion, an opportunity. And when you pull up this kind of chart and dang, what period is this?
The weekly.
Weekly, and this is what, Google?
Mm-hmm.
So that most recent bottom, is that April?
Yep.
Right. So I guess what I'm saying is the time to buy Google, the ideal time to buy Google would have been all of those candles that are below that 200 moving average. So now Google has come back and it's broken out. But had I showed Kim this chart, you know,
In April.
well, either in April or you said this is a weekly chart.
Or if you had shown this chart in, yeah,
In
April.
Had
April,
I shown this chart in
April
June or
21st.
July, what
Oh,
if I had I shown this chart in June or July, Kim, you probably would have been like, this is bearish.
no, I wouldn't have.
You wouldn't have.
No.
I don't know why. I mean, it's the same thing that those
No,
other charts.
because price came here, went started going bullish, started breaking structure. Once this bullish order block right here, once this happened right here, and this broke above, that would have been the pullback. Right. It would have shifted. So you're saying you're right. There would have been a shift in structure. But once it started buying back up, my thought process would it's going to buy back up into this zone. Now, once and that's money right there. Matter of fact, once this came back and pulled back to this demand zone, that would have been another, that would have been a possible entry for me. Once it pushed up and gave me this demand zone, this is the demand zone I would have looked to buy from here to here.
Pull up Tesla. What about this chart?
Now, Tesla, on the other hand,
The shit is a buy. Well, what do you think?
no, I agree. I and
Oh,
now,
you do? Okay.
because this was the break of structure. It pulled back into a to the 618. This is still within the structure. Yeah, I would. I'm telling you,
Okay.
I don't see it now. Now, if price breaks this low, these lows right here, if
It's not
price,
breaking from lows though.
I'm just saying, if it does, I'm just saying.
Okay.
My thought, even if it pulled back, my thought process would be it needs to pull back to here to buy if it's going to keep buying.
Mm-hmm.
So, so if I were trading Tesla, I would look for price to come back to here, at least take it to that high or up to this 27 or 618.
Tesla's probably going to $2,000.
And that's definitely possible. But I think we talked about this. Oh no, this was with my family. Um, so is the reason now it's still respected market, it's still respected technicals. Let me say that, right?
Mm-hmm.
But is the reason why it started buying up because Elon bought a trillion shares or something?
So Kim, this is what I'll tell you, and I don't know how to articulate my answer because in my time following markets,
Mm-hmm.
and I would say, this is what 2025, and I probably really started following markets probably in 2020.
Mm-hmm.
I think it's all fixed.
Mm-hmm.
So I think the headlines are there to push price one way or the other. It's kind of like what's going on with Netflix right now. Elon, I saw some shit about Elon said that he canceled his Netflix account because they show, I don't know, some gay or transgender show on the platform. And then but when you look at a Netflix chart, the shit is out of control and it needs to correct. So why is Elon now coming out and saying, "Oh, I canceled my shit. Everybody cancel your fucking subscriptions because they show gay shit or transgender shit"? Why didn't he say that shit? I don't know, $5,000 ago. You know what I mean? So I think I don't think it went up because Elon bought the shares. I think the headline appeared because they needed the chart to go up.
Mm-hmm.
Does that make sense? And I think that about a lot of headlines. It's kind of like United Health.
Wait, Sean, you mean for the headline, I mean for the chart to go down?
No,
Because
he
you
was
just said,
talking about he's talking about Tesla. The re
Yeah, I
oh,
think
okay, I'm sorry.
so. With
I thought
Netflix,
you meant
Elon tweeting about it, the gay or transgender, whatever it was. I think that was because they needed a Netflix chart to go down.
hmm
Elon stock, Tesla, I think the headline, telling everybody that he bought $1 billion of the stock was because they needed the stock to go up. So I think I just think it's all fixed.
hmm
There's a reason why when these things pull back to 61.8% or 78.6%, there's a reason why they go up. And we can say, hey, everybody that learned how to trade, they're taught to buy at these points. Yeah, but there's some kind of computer algorithm that controls price. I don't believe it's just pure unadulterated people buying shit, people selling shit. I mean, you can go back to April 7th or April 8th, whatever that was, and you can look. Why does price stop where it stops? You can go back to March of 2020 and you can look. Why does the selling stop where it stopped? You got millions of uncoordinated people, unconnected people selling, panic selling because of COVID. And that thing gives you a neat to the T 78.6 pullback. Come on, man.
2020.
If you pull up, if you pull up a 12-month chart, a yearly chart of candlesticks, and you look at April, you look at the selling action of going back to April.
On Netflix.
No, on like the S&P or
Oh.
or the Nasdaq. Well, maybe you have to do a 6-month chart or a 4-month chart. I don't remember, but the the neatness that thing lined up was unbelievable. So I mean, I don't expect everybody to believe, what I believe about it being controlled and so on and so forth. But I've just come to believe that. I've been watching Tesla. I bought some Tesla, and I knew the chart was to me kind of at a make or break point. I could see it cheating up, given that kind of diagonal upward slanting bull flag action. And then out of nowhere, Elon bought $1 billion worth of stock. How fucking convenient.
Wait, he bought his own stock? Is that what you're saying?
Tesla,
Yes,
the
Oh,
Tesla
okay.
stock. Hmm
right. I mean, how convenient. The chart had been signaling that it was going to go up. I didn't know what the catalyst was going to be, um, but it was going to go up. I mean, other interesting charts, if you look at MicroStrategy on the monthly time frame,
Um, let's see, MicroStrategy. I gotta go after this. I'm late. I'm late. Is this it?
I
My
can't see, but if
MS
you click,
MSTR.
yeah, MSCR, yeah, look at that. So if you fib that from that base,
Wait, the price is what, 336 bucks or
that sounds about right.
okay.
How far is that pullback at this point?
Um, this pullback.
Nah, the most recent pullback, because it's a complex pullback. To me, it's all the same thing. But yeah, how I mean I guess the lowest point in the middle, how deep was that pullback?
Hmm. Um, 618.
Right. So prices below the 618 right now, is that correct?
No, it's above the 618.
Okay. So the question is, does it gain acceptance below this above the 618 and maybe consolidate and move higher, or does it lose the 618 and drift down to the 786? I don't know which one of those scenarios is most likely. But if that thing comes down to the 786, I'm buying it. Period. No questions. And probably might buy some right now. But like if I had $10,000 to invest, I probably would do like 4 or 5 thousand now. And if it drifted lower, I would put in the rest.
Mm.
But these things run hot. The story that turned this stock around and made it start selling is they were talking about Sailor was diluting the shareholders, you know, just basically a FUD story, a fear, uncertainty, and doubt. Like, oh, every time he sells, he dilutes the shareholders to buy more Bitcoin, So it starts selling. But it's just interesting that it ran hot as fuck. And then boom, here's this headline that comes out. Then it starts selling. Kind of like Netflix. Kim, I know you said you had to go, but please pull up that Netflix chart. This can be the last one. This is a Netflix chart.
Yep.
So, you know, it, it's a hot chart. It needs to correct.
Mm-hmm.
But I do think Netflix is going to $1,500, maybe higher. But the question like that we all on an individual level have to answer for ourselves is when these things pull back and they're unloved, do you have the stones to buy that 61.8 pullback? Do you have the stones to buy that 78.6 pullback? Because that's where you're making your money. If the buy feels comfortable, I'm not going to tell you you can't make money, but your returns will be more muted because if the buy feels comfortable, that means that the stock price is in a nice, strong, comfortable position. I mean, there's a
That's
reason.
also the time. I'm sorry.
No, go ahead.
I was just going to say, but that's also the time when it can start dropping, just like you said. They just put out a headline again because they think, okay, we ran too high. We want to get back in and like just have a dip. Am I
Right.
understanding this right? Mm-hmm.
Yeah, you are. Because the way to think about it, investing is really a risk reward game. If something has dropped 80%, what are the odds, the ratio of probabilities that it's going to continue to drop lower? It's already dropped 80%. That's why you buy when there's blood in the streets. I know Kim said she has to go, but on your own time, if you pull up that a United Health chart, UNH, remember the CEO got shot and the Medicare fraud. If you look at the chart, it was a hot chart. It needed to come down. So, I mean, I just find that it all the timing of the guy getting shot and killed interesting, but the
600.
headlines drove the chart down. Came
Mm.
down 80%, and it's turned around and it's coming back up.
So how come, like, I've noticed that NVIDIA as well as I think Google, they did a stock split or what they call it. Like when the stock price is too high and then they split it into split one by
Hmm.
10 something. What is it called again?
It's a stock split. I mean,
Okay.
sometimes they split it in half, sometimes they split it
Yeah.
10 different ways. It just depends.
See,
Yeah.
I'm
So,
mad. I'm mad that I didn't set this limit right here.
but I mean, it's voluntary to do so. Each company can decide to do that or not, or do they actually like they don't have to do that, do they?
No, they don't have to. It's up to the company. A lot of times they do it because when stocks run up and the stock is kind of like Bitcoin, it's $100,000 a coin. You know, your average retail person, if a stock price is $100,000 a share, if it's $5,000 a share, they're gonna like fuck that. I can't afford it.
Hmm.
So they split their stock, 10 different ways or whatever the number is to bring the price down. The overall market cap or value of the company doesn't come down because you just got more shares just at more
For the
bite
same
size.
price.
It's kind of like eating a pizza.
Yeah.
You can not cut it into 10 different slices and you can just eat it whole, or you can chop it down into bite-sized slices that are more manageable. That's why they do that.
Yeah, but at least that also gives, just like you said, the person who cannot afford the high price for one, they can now afford like the split price, or at least probably more likely to do so,
Right,
right?
they can. And
Yeah.
I don't know if you guys can use Robinhood in Europe, but Robinhood allows you to buy fractional shares. Like Schwab and a lot of those other platforms, they don't. But Robinhood does. So I don't know if, in Europe, y'all got a platform or maybe a bunch of platforms that would allow you to buy fractional shares of stuff that's like, crazy expensive.
I'm not sure. But I mean, I have Google, and I remember when they did that.
Hmm.
That's the only reason why I have Google, because I actually took advantage of that
When they
split.
split it. Yeah, I
Yeah.
remember that.
That
Yeah.
was like 2 years ago or something, I think.
Yeah, yeah, I remember.
Hmm. And
Um,
Nvidia
but
did
the,
a
the the
split
thing
too.
is, and not yeah. Um, but it sounds like you're. It sounds like you're not afraid to buy bloody stocks, and that's the mentality that you have to develop. Um, you just have to. The Fibonacci works the same way it does on those currency pairs and everything else. That we trade. So when when these good companies, when they come down 60%, 80%, you got to find the money to buy them and just wait.
Hmm. But like the ones that you just mentioned, those, I don't know, prior to what we're looking at right now,
Mm-hmm.
they had some really high prices on them. Where I'm just like, dang, are they not like considering to freaking split it? Because the fact that Netflix is now over at 1K,
Mm-hmm.
like not a lot of stocks are up there, or at least not those that of the ones that I know of. I
But
remember I actually had the chance to buy Netflix, or it was put in my face. And at the time, I think it was about around 300 and something. And I was just like, not right now. And now it's at 1,500.
right. The
So
other
it
thing,
be, yeah.
the other thing I would say is I I would not let the price of the stock deter you from buying it. And what I mean is if you use that fib extension tool and it suggests that something is going to run up 100%, 200, 500, whatever the number is, I, I would buy it because the question becomes you can go find a $2 stock, but does it have 100% upside? Does it have 200% upside? So if that $1,000 stock has 100% upside and that $5 stock does not, put your money in the expensive stock because 100%, if you can gain 100% of whatever your money is, that's going to be better than gaining 10% of whatever your money is.
Absolutely, I agree. But the Netflix situation was way at the beginning from me learn not I didn't even know how to read a chart at the time.
Right.
So before I started with Ruby, I actually took like a stock market class course thingy,
Mm-hmm.
and they were talking about that, which is also why I have Teledoc. I actually have Teledoc still. I bought it at around 60. And once I saw it dropping, I saw the drop way too late because I just was like, okay, set it and forget it, basically, like buy and hold.
Mm-hmm.
And I'm gonna continue holding it because I don't want to realize that loss.
Well,
Because I
Elfie,
do think like eventually it's gonna come up.
to me, you might as well buy a little bit more on the bottom. I mean, if you bought it at $60 and it's sitting down at, I don't know,
It's seven
$3,
now. Yeah.
$7. I mean,
Was it seven? I think it's seven or something.
yeah, I don't remember. It's very low, whatever it was. So I mean, if you don't roll this bitch all the way down from 60, you might as well. you you
Ah,
I mean, you owe it to yourself to buy
I
some
just
on the floor.
outed myself. That's so bad.
I mean, you are round tripping this one. I
Hmm.
mean, but since you are though, in all seriousness, Alpha, you got to buy some on the bottom. I'm not telling you to take your life savings and buy Teledoc, but you got to buy some on the bottom to bring that cost basis down.
What is the cost basis?
So you bought it, it's the average. Like you bought whatever you bought at $60.
Yeah.
So if you buy, let's say you bought $1,000 at 60, your cost basis is $60. So if you buy another $1,000 at $7, the you would average however many shares you have together and divide
Oh, I
it
think I
by
understand.
2,000, I think, and that becomes your cost basis. You're basically going to bring your cost basis down from 60 to, I don't know, if you bought some at 7, I don't know how, it probably brings you down into the 20s, I would guess. I don't know. I'd have to do
Okay.
the math.
I
But,
think I understand the logic behind it.
right. So, yeah. So, I mean, you probably you bought probably that mountain peak in the middle of that chart.
It
That's where
was
you that's
it was
that's where you bought
20,
it.
I think I'm not sure. I think it was like in 2021 or
Yeah, that was the peak.
2020, something like that.
It was probably 2021 because 2021
Can
was
you go to the
was
monthly, please, Kim? I think it was around 2021, but when I bought it.
yeah, 2021 was the height of the last bull market. And then Jerome
Oh,
started
but it was
hiking
higher
rates.
than that. No, it was after. Go further to the right because it was around 60 something bucks.
She
So it
probably
must
bought
have
in
been
that
in
wick
2022.
in that wick January
Something,
2022.
yeah, something like that.
I mean,
And
I,
like I said, I didn't even know how to read a chart, and it was just like one of the things that they put on the list from that class. I mean, from the group. And I'm like,
yeah.
okay, well, let me try.
So, and this is what I mean about risk reward. When a chart runs up like that, I don't care how much hype and headlines, you can't buy that chart because the risk is that it's going to fall. It's run up too much. That's why, I would love to buy gold. It's too late though. I mean, gold's chart looks like that chart before the fall.
Yeah, I know this now though.
Yeah. So, but yeah, I mean, if you bought in that wick, you might as well buy some now. I mean, now's the time that you shouldn't be scared to buy.
But now I'm looking at other stuff. It was just like every time, like I keep forgetting about this anyway. Like it's not really on the in the front of my mind, at the
Mm-hmm.
front of my mind. So I'm just
Yeah.
like, yeah, okay, whatever. I do have NVIDIA. I have Google. I have AMD, and they're all doing okay. So. I'm not really
Yeah.
mad, you know, it's just like what? And yeah, but
Yeah. Now when we get into December, and I'm guessing here, when we get into December, it's probably gonna be time to look at your stuff and make some decisions. And really, I would be using that fib extension tool, because as those things run up that tool, especially if they get to the 4.236 fib extension, you ain't gonna want to sell that stuff, but you're gonna need to sell that stuff.
okay.
Because as you move into all-time highs and there's no price history for you to look to the left at and point, that Fibonacci extension tool becomes kind of your map, and as you hit, you know, those lines, those fib extension points, um, if you're fortunate enough to get to run that bitch all the way up to the top, it may run off that scale and keep going, but you know, bulls make money, bears make money, and pigs get led to the slaughter. So at some point, the higher as price runs up higher on that tool, you're gonna have to start layering out to make sure that you realize and see some profits. Otherwise, you probably gonna round trip it like you did Teledoc.
Mm-hmm.
So, but the hardest thing, at least for me, the hardest thing for me to do is when I'm got lucky and found a winner that explodes like that. Man, I do not be wanting to sell that mug, man. But the other thing, just for your knowledge, to keep, like, I think we're getting to be late in the bull cycle. So if we ever get to a point to where prices moving really fast up, we're that's the blow off top. So we haven't seen that yet, but if you start seeing that in your Google, in your or whatever you have, if you have crypto, you start seeing that in your stuff. You start seeing that in the Nasdaq, in the S&P, then just be aware that you're riding a blow off top up, and you got to consider taking some profits.
Okay, cool. Thank you.
Well, you're welcome.
Thank you, Kim.
You're welcome. Anything else from anybody else? Anything going once, going twice? Okay, thanks. Bye. I gotta go.
All right.
Bye.